Let's bring on board Sandeep Shah, Associate Director at Motilal Oswal Private Wealth Management. He joins in the show to talk about his thoughts on the market. Sandeep, hi, afternoon. Good to have you on the show. What's the next pocket to bet big on now that we're already at the live top? Where do you put fresh allocations in, or do you wait for corrections whenever they come?
Well, actually, when the index had hit about 8,000, this is actually the day before demonetization happened. I had actually recommended to clients to actually add, and I said that we could see a new high, and I think we're fairly close to achieving a new high now. I think this is just, I think the markets and the economy still have a long way to go from here. There will of course always be intermittent corrections, but there is no reason to actually not allocate to equities. I think you should be allocating to equities, whether you're allocating to funds or whether you're buying stocks, and I think you should continue to do that. You don't forget the maxim of staying invested in quality businesses, because that's where your capital preservation comes from. I do think that about 6 to 9 months back I had mentioned that you could look at about 20% allocation to quality cyclical businesses which were showing signs of growth, or which were showing signs that the temporary headwinds were actually abating. I think I would go as far to say that you could increase that exposure to 1/3, and maybe 2/3 of your portfolio, whether it's mutual funds or whether it's stocks, could remain focused on quality and growth businesses which are showing secular growth trends. So from that perspective, the secular growth stories continue to remain in the private sector banks, in the consumption stocks. A few select, perhaps pharma names have got hurt. I think there could be some bargain hunting there that could be done. Some of the NBFCs, auto ancillaries. So some of those stocks continue to look good. At the same point of time, I had advocated and I continue to advocate selectively looking at some of the large PSU banks, but at this stage I would rather wait for this quarterly result to come out, given that a lot of them will get hurt by on the treasury side. B, we want to see the impact of NPAs on the SME sector, on certain specific portfolios like loan against property. Commodities, we've already seen it's probably the middle of the move. And you could see some move up from here as well, but it's not for people who are chasing value, because they are now actually priced for growth at this stage. So I think that's the broad brush in terms of sector allocation. But yes, continue to look into buy into equities. I had a target of 94 to 9600 on the Nifty for the shorter term. Let's see if we get there and how soon.
Okay, so while we're waiting to get there, are you revising any of your targets as well? What are you advising your clients?
Yeah, so we have actually been advising clients to actually phase in their investments, given the fact that on the one hand you have a lot of quality stocks which are actually growing well, in spite of the fact that last 2 years there's hardly been any earnings growth for the Nifty. Similarly, there are a lot of funds as well as stocks which continue to do well in this environment. And I think all of life and all about investing is about identifying outliers. We want to watch the best news channel, we want to have the best anchors, we want to have some of the best speakers, right? And we want to invest in the best stocks, we want to invest in the best funds. And I think Indian market is, given the fact that we're still in fairly early stages of growth as an economy, it's possible, it's not very difficult to find companies and businesses that are outperforming or doing well in an environment which is actually isn't high growth. We aren't in the high growth phase of the economy. But I think, and as the market moves towards, and as more and more engines of the economy start firing and you start seeing more and more companies participating in that growth, you will see that the returns actually also pick up. So while we've seen that in this current rally, large caps have actually led it, if you look at the last few hundred points, and there is this view that mid caps, if you look at the mid cap index, it's actually expensive. But I would argue that there are a lot of actually mid-cap stocks which are actually still attractive. Don't just go by the index. There's a phrase which says lies, damned lies, and statistics. A lot of the nifty mid-cap 100 is actually a very lot of large companies. Some of the companies have a market cap of 1 lakh crore, and we still call them mid-sized companies. These are actually large companies. So I think there are pockets of investment opportunity across market caps, and I would continue to recommend investors to buy equities. You could, if you like, if you were a little concerned about markets, you may choose to phase it in. You may either buy the same stocks slowly over the next 3-4 months, or the same fund. Or there are also certain products like AIFs which actually just draw down 1/3 now and then draw down another 1/3 after say 2-3 months, if you're really so worried about markets. But if you're focused on the longer term and you're able to find relative value, you should be investing in equities.
Yep, keep the faith going. Sandeep, great speaking with you. Thanks much for taking the time out and joining in as always. Okay, that's the view coming in from Sandeep Shah from Motilal Oswal. In the meantime, let's take a relook at what the market is up to. Still clinging on